Hey there, welcome back to another video from me. So today I would love to talk to you about 3M. Today they reported their earnings as many other companies did, and wow, it was for me really a great look back at their fiscal year 2020. So, and you know, just look at what quality means. I mean, also look at other stocks that reported today. Johnson & Johnson reported their earnings. If you look at my retirement fund portfolio with the stocks I currently own, it's 2.4% up just based on decent earnings, and that's being rewarded today. But also General Electric, a stock that I really made lots of mistakes with. I still have some stock shares there, and actually I must say this new CEO is really doing a good job. He's really turning around this company. It doesn't belong in my portfolio anymore because it's not a dividend paying company anymore. But it's really nice to see that the CEO is turning things around, and hey, who knows, maybe becomes a long-time dividend payer again. But also, for instance, Novartis reported their earnings today. Although the stock is down, I looked into their earnings and I found them actually quite decent. So I'm quite satisfied with that. The only thing I found a bit disappointed was the 1.9% dividend increase. But I think if you look at the past history of Novartis, it's not a surprise. They've been all the time hiking their dividends with really small amounts, like 10 Swiss franc cents. So today I want to talk more about 3M, one of my favorite stocks in my portfolio. But before I go there, if you like these kinds of videos and these kinds of market comments, please just like this video. Also subscribe to this channel if you haven't done yet. I'm trying to get to 1,000 views over the upcoming months, and yeah, well, let's see, who knows. So let's look at 3M then. So as you can see, the stock market responded quite nicely on it. It set the stock up with 3.5%. But personally, as a dividend investor, I'm not always too happy with that, because if earnings are good, I actually hope usually on a decline in the stock price so that I get to buy more. But let's talk a little bit about 3M today. So I assume personally that most of you know this company already. Yeah, but just a really brief background. So 3M actually stands for the Minnesota Mining and Manufacturing Company, and it was founded in 1902. It has a really long history, and it is really one of those few dividend aristocrats that has a track record of 62 years of consecutive dividend hikes. Let that sink in. 62 years. That's more than my life, and more even probably than my mother's lifetime of increasing dividends. It's insane when you think about it, and it shows something really about the earnings power. And it's not just like small hikes. It has been continuously with an average of around 6 to 7% growing their dividend over the years. And actually, I said it's 62 now. Next week, I expect their dividend announcement for the upcoming time. And yeah, let's see. I expect something like 5 to 6 to 7% again. But I will show you later, right, that the numbers can also allow for such an increase. What's probably good to mention in general is that if we look at their stock, and let's look straight away into the fiscal year 2020 earnings, it's probably good to show like their businesses. So they are split into 4 business segments. It's called Safety and Industrial, Transportation and Electronics, Healthcare, and Consumer. If you look at this, then it's no surprise that if we look at the percentages below here, that transportation and electronics has been the slowest growing business unit, because it's heavily dependent on the industry and the automotive space. And as you know, with these lockdowns and such, it looks a little bit different now to how is it when we think about it from a demand point of view. But what is interesting here, so Safety and Industrial amounts to 35% of their overall business. This grew by 11%, and it's mainly due to pandemic-related demand. And think about personal safety, think about the respirator. Sorry, my English is not so well, so that I sometimes struggle to pronounce these kinds of things. But yeah, I mean, so this is no surprise that there's a lot of demand here. But what really stood out for me is how much cost control they had over the last year, and specifically last 2 quarters. So they've been effectively really having a well cost discipline, spending discipline as they call it, also in healthcare and consumer, and this allows them to increase their margins and therefore to beef up their cash flow and earnings. At the same time, it's also nice, and you might not read it here, but later on in the details in the report, they also scaled down their buyback program. So what you will see in this report is that they really generated a lot of cash last year. Of course, it gives always a bit of a double feeling. I mean, many people are out of work, so we shouldn't celebrate and pop the champagne when companies have been effectively cutting costs over the back sometimes of employees to beef up their earnings. But you know, from a capitalistic point of view, from an investor point of view, I just like these kinds of things because it shows that they are in control over their spending behaviors and still able to increase their sales as well. What stood out to me actually as well, and from the smallest business unit, which is around 15%, and I read this earlier somewhere this week, that the home improvement sector is really booming. And specifically, I read about it in the United States because seemingly people are using the opportunity for remote work to go live out of state and actually build a new house. But also other things like people now need a new office room in their house. They spend more time inside, so they start refurbishing. So the whole home improvement sector has really been booming, and also clearly 3M has been benefiting from that. I would say that, you know, generally I would think 3M for most of you is just known by duct tape and Post-its. It's as simple as it gets from a business to consumer point of view, but it's, as you can see here, it's really huge actually in the business to business. If we then also look at the pandemic response and this I find really impressive, right? How this company has been able to help. And I don't know if everyone still remembered how it was going with at the time with the pandemic and the 3M face masks and such, and how much pressure there was on 3M, but they really delivered. So 2 billion respirators. Let that sink in. We have 9 billion people on the planet, and they were able to increase it to 2.5 billion capacity. Insane, just what they have been doing. They helped speeding up the vaccine. They supplied more PPE everywhere where they could. I mean, if one company was there really on all fronts fighting to save us from this tyranny of this COVID-19, then 3M definitely deserves a medal, in my opinion. And it's just something that, on top of the quality of their products, is something that I just really appreciate, because the company has been really helping us out as citizens to really fight COVID-19. What I then also find really interesting, because there's a reason why they can do this, right? And this is innovation. And I wanted to let you know why I love this company so much, because they are literally spending 5.9% in 2019, so I haven't seen the 2020 figures yet, on R&D as part of their percentage of sales. And did you know that, for instance, this innovation culture is not something that they just advertise, but it's really true? I mean, they spent 15% of their employee time on innovation. And I found an article the other day which I really loved, and it's an old article from 2016, but I believe it's still applying. And this is these comments are from Larry Wendling. I don't know where he's now in the company, but what I really like is that it's not something like about innovation itself or doing innovation, but he really gives some examples, and it's based on 7 principles. So one is, for instance, the culture of individual freedom. Yeah, and this is what I read elsewhere, that I think it was 60, 70 years ago, one of the CEOs at the time, he started to file his own first patent himself. He really had this culture of, you know, we hire great people, so why should we really tell them what to do? Just give them the freedom, let them spend time on innovation as well, and we will do well. And this is still in the DNA of this company today. I even read somewhere the other day that I couldn't find the figures anymore, but I think approximately 40 or 50% of their current sales is just from products innovated in the last 5 years. insane. For me, this company, their innovative capacity is why it's doing so strong currently in COVID-19. This is such a strong industrial, and you can hear me. I'm just biased. I'm all over the place. And what is good for you to know, probably, I own already 27 shares in 3M, and I bought them actually at the downturn in when just the pandemic broke out. So my average cost price, I think, is around $155. I think I bought some then at around 159 and later at 145, something like that. So this is a little bit of background, a little bit in the numbers. Let me also show you the quarterly report a bit. So what I just wanted to highlight to you is here. So their sales are up, not that much, but I said 32 billion still, but that's okay. It really came down to the cost savings and the operating margin. So their EPS is 9.25. And I will show you later where it came from, because it's really a large increase. An increase of 18% in their free cash flow. And also their, they've been using this excess cash to pay down their debt. And I'm so happy with this, because the trend lately I see is that companies are more and more still leveraging their balance sheets to buy back shares. And actually 3M has not been doing this lately so much. So I'm really happy with that, because it just makes their balance sheet stronger. Because honestly, last year I was a bit concerned with the trend, but they really used this crisis to clean it up a bit and to turn it around. And at the same time, they are still expecting earnings from $920 to $970 next year. I'm calculating the forward earnings later when you see the statistics based on a $9.35 next year's earnings. And what I wanted to show you in particularly is the year ended 2020. So here you can see it. Mainly their earnings are up because their cost of sales has been more than $500 million lower. And you can see it then here coming back in the numbers. So $500 million here, then also some gain on sales, which just makes the total operating expenses quite low with almost $1 billion. Yeah, this is why the earnings are so high, and also the cash flow related to it. And here you then have the net income, 5.4 billion versus 4.6 billion, let's say, which leads us to a 9.25 diluted EPS versus a 7.8. This is a massive increase, but again, it's mainly due to great cost discipline, because itself, the net sales stayed the same. I think this is also really the highlight that you should take away from this report. Excellent cost discipline, because other than that, there's nothing specific in here which I would like to mention. Well, maybe one little thing, probably. You need to know that their total equity is relatively low. If you would go through the details of the total equity, which they have in another report, you will see that probably they have like a returned earnings of 40 billion, but they have got also an equivalent of 30 billions, I think, in share repurchases. That's why the total equity in itself looks low, but it's because of all the share buybacks in the past. So if you later look at the debt to equity, it is actually more towards the 150 and the 60%, but this is no concern from my point of view. Okay, so let's have a look then now at their dividend, because they have, like I mentioned already, a dividend history of 62 years. So what I really like about this picture here is how you can see how they've been controlling their payout ratio from the cash flow. It started to spike a little bit in 2018. That was also the time that I got a bit concerned. But now with the recent crisis and the additional cash flow due to cost savings, they've been really able to bring it back to a nice level again. And look at how they've been increasing their dividends. They were 2.20 back in 10 years ago, and now it's at 6.12 actually, the forward dividend as per my estimate. So this is really tripled just over a decade. But what we can also see that over the last 5 years there was really slow growth, and this has to do with the payout ratio, right? A growing payout ratio. So I expect now that with the cash that it will grow a little bit again. I calculate with 4 to 5%. I wouldn't actually be surprised if they would even just give us a 7 or 8%. But let's see. I personally hope 4.5 because it means that there's enough wiggle room for future dividend increases consistent with the 4 or 5% average growth. Here you can also see the trend in free cash flow as an example, or in the earnings. So the earnings have not been growing so fast just since the last year. Again, I actually don't know if they can keep so much cost control in the upcoming year, but hey, from a cash flow, this was just a record year, as you can see. So let's then go to some of the statistics. They have now a dividend yield of 3.3%. I expect it to become 3.5 after the next week's dividend hike. Their 5-year dividend growth rate is at almost 8%. Chowder roll almost 11%. That's quite good. EPS, cash flow look all good. Remember, this is a rock year, right? They had a really great year. So if they have next year a little bit of a setback again, you will see that these numbers quickly go up. But for now, I think it's really good. And if you think about this company, the price to cash flow for 16 or a forward PA for 18 in this low interest environment where all the stocks are above 20 PE and where also well-performing stocks are almost 30 PE, I think 3M is really deserving much more love from the investor community. What I really find exceptional here is their value gap. And what I mean here is that the return on invested capital is higher than the average cost of capital, so how much they pay for capital. A value creation of 13% to shareholders. This is insane. This is really high, specifically for such a stable company. And I'm 100% convinced that this is not possible without their innovation capabilities and what they invest in innovation. For me, this is like, boom, mind-blowing what they are able to achieve. And this is not the first year. It's already 2-3 years in a row. Mind-blowing for such an industrial company. Wow. So what does my fair value estimation say then? I think that the company is currently valued at around $200 per share. I used for this an estimation of around 5 to 6% growth in the next 4 or 5 years, and then a more 3 to 4% growth in the 5 years after that. I think this is not too bullish. I think this is relatively normal for what 3M has also been doing historically. And the worst case, I believe I was looking at a 3% growth for the next 5 years in cash flow, and then 1% for the remaining 5 years. I think that's very bearish. This might likely be the case if we would go into a really economic downturn now, which would last for a few years. Then probably the value would be more around $140. That might then also be the bottom that you might see in a sharp sharp financial stock market crash. So $200, currently they are spotting $176. So I think it's just a buy. And you know what? As a bonus, what I'm going to do today, I'm just going to buy them. So I've quickly logged into my DeGiro account where you see a part of my portfolio. I think it's around half of my portfolio. And what I'm going to do is I own currently 27 shares, and I believe that 40 shares is a nice round number. So what I will do now, I will buy an additional 13 shares. Let's do that here. I would like it to be a market order. I find the price fine like how it is now. 13 additional shares. This will make it an investment of, how can I see that? It's a market order. Okay, it doesn't say the total, but this will be something like $2,000 at the moment. And this is something which I think is worth paying now for. So let's do that. And there we go. I own now a position of 40 shares in 3M, which makes my position total almost around $6,000. So yeah, this just shows you how I'm convinced about 3M. And having said that, let me know what you think about 3M. I'm really curious. I'm really bullish on the company after these fiscal year 2020 numbers. I feel very safe about their dividend prospects. I just think this is a rock solid company. And remember, as a value investor kind of thinker, we usually like to average down, but we should neither forget to average up. When companies are hitting the marks, when companies are really delivering on the earnings and your calculations or your analysis that you have in the past, you need to average up as well. We shouldn't be only greedy. It's worth paying this for a high quality company. Thank you. I hope you enjoyed it. Remember, hit the like button or subscribe to this channel if you haven't done yet, and just spread the message. I'm trying to help you to become a better investor by sharing my knowledge and sharing also what I'm buying, what I'm selling. So just ask me anything, full disclosure here. Enjoy the day.